The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and it's my pleasure to be here Monday, Tuesday, Wednesday, Thursday, and Friday, every week, 11 o'clock till 12 Eastern Time, and great pleasure to be here, and it's a great pleasure to be able to follow Steve Rhodes, 2 hours of Steve, 9 o'clock till 11, and great show, great analysis. And of course, today being Tuesday, I am followed by Think or Swim's Option Hour, and that should be a great show as well. Got programming right through the afternoon. In fact, a full day today. We've got Daryl Martin comes in after Think or Swim Options Hour. Then they rotate through the different personnel there. Just fabulous technicians talking about options and the way to use options, best way to using premium, etc. And then we've got Daryl. We've got Dave White. We've got Tuesday, of course, today. And today is where we get commodities all discussed by Andy Hecht. And then 4 o'clock to 5 o'clock today, I believe, is Andy. Yep, it's Andy. And then I will come on 5 o'clock till 6 to do Tom O'Brien's show. So 4 o'clock till 6, we're covering 2 hours. Andy goes first, I go second. And it should be an exciting day. It is a very exciting day. I'm going to explain why. I've been talking about this for a little while. And before I go on, I'm going to just mention to the Dan that I'll be doing a lightning round if they want any stocks they want to just throw out there. We'll just have it take a little time and go through that. But one of the things that I'm talking about here, I'm going to run the numbers, and you'll see something very interesting. We haven't had this for a while. A little bit of red, it's just I don't know where they actually got that ink from. Oh, maybe it was from the Fed. They got the ink from the Fed. Anyway, they got a lot of red today. And the Dow is down 122 at 50,489. Peak F top in the Chapman wave. We'll talk about that in a little while. S&P is down 1244. S&P was very reluctant to move. I was a little concerned there because IBM was acting poorly, so it obviously affected the Dow. But it was so fascinating to see that the S&P just hung in there at the beginning. But now it's down 0.74%. Dow's down 0.80%. Yep. And we've got the comp index, which is down 36 at 3656. You've got, now this is going to be very interesting. You've got gold down right now for the GLDs at minus 132, 124.38. I've been talking about the 125 to 124 area as being very important. So we're going to be watching that. Now, this is something that I haven't spoken about for a little while. I'm going to put it in. I'm absolutely sure I've lost the chart, but it should be there. I'll do it quickly. Not checked off. Let me do this one little check there, and we go to the XAL. On the XAL, no, I can't believe it. These charts that I spent so much time on, they're there somewhere. I'm getting sick and tired of it. I hope this gets fixed very soon. We've got peak A, B, C, D, E, peak E in the XAL. This is the airline index. So this is going to be something to watch really closely, the ARCA airline index. And as you know, I've been talking about for about over a week. I don't know if it's 2 weeks, but at least over a week. I've been talking about sell signal in the Dow that in my opening call, my subscribers, we went short the Dow. Around about, let me just double check. I think it's about this... a little higher than this. The Dow's at 15,490. I think it was about 15,520 for the exact figure. We're also short the S&P, and we're short another index. I'm going to talk about that in a little while because it's just so interesting how sometimes you can identify things using your techniques really well, but it's the trading vehicle that you use that is so... Sometimes it's very difficult to know what to do and to do it correctly. And sometimes you got to do what I did. You have to go in twice, even 3 times, even 4 times to get it right. Because if you're right, you more than make up those tiny little losses. We'll talk about that in a moment. So gold, as I see it, is down 11. Was that correct? Has gold sprung back a little bit? Anybody there tell me the latest on gold? Let me just see. Yeah, so the XLA B, C, D. There it is, peak D in the XAL-LI index, pulling back at a fabulous move. I think it's just time for a rest at 58.48. Could even pull back to the 53 area. It's got the 57, very strong 200-period exponential moving average. Yep, gold is down 16. So this is going to be interesting. If I look at the gold contract, what we've got is made a peak D. I'm going to go through this carefully. On the 28th of June, gold hit 1179.40. It's been in a peak F sell mode for a long time, and that is based on the monthly chart at peak F back at 19. Well, I can't tell you the price because it's a continuous contract, but it was the high of September of 2011, and it pulled back to a trough D. But the daily chart had a nice spring, and I said there could be a nice move here. It's also, again, a kind of a time thing rather than a percentage move. I don't think that gold is going to break down and retest the lows yet before it does more backing and filling to the upside. We've nibbled back into the gold this morning on that very sharp pullback. Fairly tight stop, 1% I think it is. But this is going to be interesting. See that doji candle from the 28th low of 1179s? It went to peak A, peak B. Chapman wave methodology, you look for 4 higher peaks. Peak A, capital B, capital C, D. D's where you got to be careful. Yes, it can go higher, but D's where you got to be careful. And what did we get? We get a peak D at 1349.10 on the 23rd of July. Now we've come back using time. It's even a little bit of a channel here. MACD is still quite good. Hasn't yet crossed positive. The day's young. Maybe it'll cross positive by the end, cross negative by the end of the day. It's still positive. The stochastic is showing no sign of strength right now at 46.08. So you have to go to the 120-minute chart. And that 120-minute chart is saying, hey, I'm right at the 15% area in the stochastic. The MACD is not bad. The histogram is giving a positive divergence with a lower price but a higher technical movement. So there is a chance that we're trying to find some kind of support. It's worth the risk reward right now to be nibbling at the gold. No, I'm not talking about the stocks. I'm talking about the GLD or its comparable ETF. So let's go on. And we've got silver, which is down as well. Silver's down 15 cents at 19.57. High-grade copper's hanging in at 3.19. Yeah, it's okay. Most importantly, the dollar. Now, let's just quickly do this, and then I'm going to take the calls, and then we'll do a lightning round a little later on. So we've got peak A in an arch formation. Says that the technicals say that, hey, you got to be real careful because the dollar could, in fact, test 81.41. Today, for me, is a very big test of a number of different things. We'll talk about the VIX as well. Remember, I spent some time on it yesterday. I said this is an area where you might get a bit of a bounce today. My opening call, I said to subscribers, this is bounce material right here, and we've got a sell signal. No, I haven't got a sell signal yet. That was this morning. I do now, but I didn't have a sell signal in the Dow or the S&P. I was anticipating it based on the Chapman wave lettering notation and some other technicals. So now what we're looking at, as well as a crossover in 2 moving averages. So gold is going to be very important because the EUR USD could go for leg D. That's what I'm expecting. Remember, in the Chapman wave methodology, you anticipate buy signals go to buy modes, which go to Ds. And at 1.33440, you will get your leg D. Right now it's at 1.33102, so it's underneath the previous high. I think it's going to get there based on the MACD and the slow stochastic. Let me see. Oh, and something that I needed to watch, and I mentioned to my subscribers today, are we going to get the 3 bears, Dolly, VIXI, and Bondi? Will bonds move higher? Well, they haven't. The TLT is down 0.09. Will we get the dollar moving up? Well, we haven't. The dollar's moving down. But will we get the VIX? Everything, as far as I'm concerned, rests upon the volatility index. And that'll be the final thing. Then we're going to go to our callers. The VIX is up at 12.92. And what did I say to my subscribers this morning? I said, this is the close of yesterday. This is the quintile, the 5 areas that we look at for the overview and market today. We had a peak E in the 120-minute chart at 15,658 of the Dow. If it broke the support level it can go down much further. The arch will form under 15,550s. We're right now at 15,493. So that says a breakdown. Days Young with the 120-minute chart closes on the next 120-minute bar, so I can talk about that. And the volatility index, I said, it's at 11.84. New lows. Needs 12.50s to trigger some stronger selling. And we're at 12.90 right now. The trend index is not giving me any information right now, and you've got a peak F in the Dow. I'm almost sure that I have to call this a peak F. There's no other way I can call it right now. In the daily, and a peak F in the S&P daily. That says to me, be careful. Be very careful. Okay, I think we're all ready to do a bunch of things. I'm marking them down here for your questions, and I'll write them down in the next break. But we're first going to go to Jim in Seattle. Hi, Jim. How are you?
Oh, fine. How are you, Mr. Chapman?
I'm very well, thank you.
First, I want to congratulate you. I went to your website, I believe it was Thursday or Friday of last week, and right there on the headline you said minus 100 Dow as a possibility, and today that sure is happening so far. So congratulations on that, sir. And the question I have is, I'm new to the Tiger Financial, and I was wondering, sir, if your methodology and around May 22nd was able to catch then the top in the S&P and Dow, and then the subsequent bottom that came around June 24th. And if you feel this correction might be even more drastic than that 1 month basic down move.
So are you talking about the high of the on the 23rd of, no, you're talking about May of last year?
Right. May of this year, where it
yes.
topped out around May 22nd or 23rd, the S&P and
right.
And then it went down until about June 24th.
Yes, exactly. That was peak E in my work, and that said that we could be pulling back. We pulled back in the Dow to 15,405. Now, what I did is that we went short in my opening call for my subscribers. We went short via a 100% short the Dow, not the 200% that most people use. I wanted to tiptoe in, but then we added the S&P as a double short just recently. So, in fact, yesterday we added it again. We got stopped out for a very small loss, a 20-cent loss, but we got right back in. And so that's working out very nicely for us. But it's really the most important thing is, let me just explain. I don't know if you can see the Tiger TV. Are you able to see that at the same time?
No, sir. No.
You're not. Okay, well, you might want to go back. I'm on channel 11, and you'll see the it'll be archived in channel 11 later on today. Let me just explain a couple of things so that I can go through the methodology. So otherwise, it doesn't really make sense. I'll explain to you what I'm looking at. We're on with Jim in Seattle. We're looking at the Dow chart, and I'll talk about the Dow and the S&P as soon as we get back. We'll be back with Jim and Jan in Knoxville. Basil Chapman, Dow's at 112.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. Basil Chapman, Tiger Technicians Hour. We're on with Jimmy Seattle. We're talking about the Dow, and I'm going to talk about the actual waveform for a moment, and then I'm going to talk about what I'm looking at, because I had a number of questions about it. Could this be a deeper decline than we've seen before? And the answer is, I believe so. And what started off with no news, just only good news, even the deficit, the trade balance, beautiful comeback in the trade balance. That's very often where you get a kind of a stealth pullback and then some bad news comes. But I don't think it's necessarily that. My thinking right now is that what we're looking at, people always say, oh, the market's it's all this uncertainty. And I've said for years, decades, I've said, no, no, no. The market always handles uncertainty. What it doesn't like is uncertainty about uncertainty. And that's what we're getting now. We're getting, with Larry Summers and Yellen, you got a whole bunch of things going on. I would not be surprised if we are looking at a situation now that says, watch carefully, because they are just make it as simple as you can. If the Dow, as far as I'm concerned, closes decisively underneath 15,400, that will say we've got time and we've got price to the downside. I'm not talking crash. I'm not talking anything. I like to go step by step. I have to go step by step in my work. Why? Because I always look at the left side to see where the resistance and support levels are. When you're going to all-time highs, then you have to use channels or whatever line. I use something called the inside track. And that inside track says, and Jim, you're still there, right?
Yes, sir.
Okay. So what I'm going to do, you do have the charts themselves, your own charts of the Dow, the weekly. Do you have a weekly chart of the Dow?
I've had it before, but not in front of me now. But
I mean, you're able to get it, right?
Yes, sir.
Okay. So what I've done is I've taken the weekly chart and I've drawn trend lines. And the one most important trend line, for those of you looking at Tiger TV, you'll see this dashed line right here. It goes from the low back in June of 2011, June, the week of the 24th, around about the 11,870s. And it goes to the highs, all the highs. There's a whole cluster of them all the way through January of 2012 and then right to March, and then there's a breakout. But then it comes back and it keeps testing. So I like to look for key trend lines. I look at the most hit or touched peak. That's the top of the whole bar. That's whether you use bar candles or whatever you use. It's the very top of the price movement of that particular bar, or the bottom. And in this case, it keeps going on, and then it touches exactly at 14,887 back in the week of 12th of April, peak C, and then it goes on, and all of a sudden you've got to break out to the upside. Well, I'd already drawn in some time ago another trend line. I call this in my work the inside track, and that inside track is often it has to do with channels, or it could be its own single channel if there's a rising wedge formation. And in this case, it's a channel. And that channel line went right to the 15,542 high, most recently on the week of the 24th of May. Got that sharp pullback, 200-point pullback. And then we ran up. And where did we run to? Right to what I call E/A. My preference is for E, and I'll explain why. This is the weekly chart. The MACD has barely crossed positive. So that's a divergence between price and one of the technicals, although it is at this particular point just barely. If I look at it closely, the MACD is at 398 over 400. So yes, it's still slightly positive. The stochastic's at 95%, and I've said as long as that holds in the 90s, that's very good action. The only way I will get a sell signal that can go to a sell mode in the weekly is if the daily starts to break down quite sharply, and you have to have that sharp pullback underneath. And now I'm going to get back to the drawing in a moment, that the one that you saw. It needs to see some kind of shorter term activation of the change of direction. Well, right now we've got one confirmation, but it's 2 hours into the trading day. So for me to talk about it and say, oh, yeah, I've got my sell signal, anything can happen, we know, in this market. We could have a turnaround by the end of the day. If the volatility index starts to pull back, then there could be a bounce all the way to the 15,560 level, and all of a sudden we've got, out of the last 30 or 27 sessions, yet another close above the 9 EMA. So I'm going to be back. Do you mind holding?
Well, yes, that'd be fine.
You'll hold? Okay, good. So if you hold, I'm going to go through and try to make some clarity out of this, what the positives and what the negatives will be based on price. And if Jan doesn't mind holding, Jan, I will be with you because I do want to look at IBN. I'll be IBN, not M. I'll be back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman. We're back with Jim in Seattle. I did during the break do a couple of Den requests. I typed them in. I'll try to go over them again a little later on. I didn't get to everything, but we are looking at the Dow. Now this is very important to me. I'm going to open this up here. INDU, this is the Dow. I'm going to do the daily again. I'll do the one at a time. What I showed subscribers was if you do a vertical line, the technicals in the MACD, the moving average, convergence, divergence, and the slow stochastic were almost at their highs on, that was on peak E at peak E, that is, on the 23rd of July at 15,604. When this last high was made at 15,658 on the 2nd, 3 days ago, look what happened. Let me just move that over a little bit. Look, the MACD had deflected lower. The stochastic had made a V-shaped inverted turnaround, although it's still at 80%. That's okay. It's not great. But it says that the technicals at this point replicated something that I looked at. I took it away, but I'll put it back in here. Back when it made a peak E at 15,000, was that 14 or 15? Back on the 22nd of May at 15,542. Look how high the MACD and stochastic were. They were even higher than at this last move to the high. And now, if you go to that peak F, the last peak F, and I love the way these things repeat, right there, peak F is the sixth highest peak from the most important low bar. Let me just change this pink and then change it again so you can see what I'm looking at. Look at the difference in the technicals. You will see that the difference, and you can make a note of this, Jim, that the high of the 22nd of May in the Dow and the high of the 28th of May, the price went higher, but the technicals were fading, and then you got that sharp pullback to the 14,555 level. That, in fact, started the very opposite, where all of a sudden you got at 14,551, the technicals reversed up. Now you've got the same divergence between the two recent peaks, the peak of 3 days ago and the peak of July 27th, did I say? 23rd. So what it's saying to me now, there's another pattern that I need to look at, and I put this in yesterday or the day before, and this is going to be very important. It's this oval pattern. If the Dow holds the oval pattern and does not break 15,405.16, I mentioned the 0.16 because if it goes to 0.15, that's broken it, and that's a negative. But if it doesn't, but in fact holds today and tomorrow and starts to worm its way higher, you could recycle to the upside because the price determines the trend. Not all the technicals, they help. We very often see, I mean, look at the weekly chart. Look at the MACD out. If you looked at that MACD, if I looked at the MACD and someone said to me, when it was over here, back on the, whoa, I didn't mean to do that, back on the 24th of May, the price was way up in the 50,500s. Where do you think the price is now with the MACD? I would have said, oh, it must be way low. It must be down at the 14,800s. So that can be deceiving. It's like holding a balloon up and the hot air or the air itself keeps the balloon up. The air dissipates and starts to fall. And just for a moment, that balloon doesn't know it. It just holds up there. When the air comes back, if it doesn't push the balloon to a higher high, when the air dissipates again, it could start to make lower lows, and that's what we'd be looking at. So let me define it really clearly for you, because your question is kind of, where are we and what do I think? And what I'm saying is, I need price to tell me if the volatility index, which is at 1266, starts to get to the 1318, 1420 area, the selling will be sustained. I'm very interested in whether it's going to break over the next few days, and it has to be the next few days. Break under 15,400. A close in the 15,370s gives me two things. It gives me a sell signal. By the end of the day, I'm probably going to have a sell signal. I'm waiting for the day. But it's going to immediately upgrade that sell signal to a sell mode. That says time and price to the downside. Then the weekly chart kicks in, and 15,372 is the level there. A close below that in the 15,330 area says, uh-oh, watch out, because the weekly could start to fail. That 95% in the stochastic is still a very big positive for the weekly chart. Where does it break out to the upside? Any close above 15,660 will be very positive, and that means that the weekly chart, which is the greater tide, is still acting very well. I hope that helps you.
Oh, definitely it does. I appreciate it, Mr. Chapman.
Thank you very much. And two things. One is you can call me Basil. And number two is if you have a chance, go to the archive at 11, channel 11. And the other thing is I will be doing Tom's show this evening at 5. We'll have much more clarity then, and I'll go through this again. Thanks so much for calling, Jim. I appreciate it.
Oh, thank you again. Thank you, sir.
Thank you. Let's go to Jan in Knoxville. Hi, Jan. Thank you so much for being patient. You'd like to look at? Is Jan there?
This is John.
Hi, Jan. How are you doing?
Good, good. Basil, I have a put, an IBN. It's,
oh, yes, good.
I've had it for a while. It's going quite well.
Have we talked about this? Have we talked about this before?
I don't believe so.
I know someone called me up about it 2 weeks ago. Mm-hmm. So, and I didn't like it at the time. So, well, first of all, I have to give you congratulations, because having puts in this environment for a lot of people has been really tough, and this is a beautiful, beautiful position that you've been in. Normally I would say to you, wow, this is the time to start looking to take your position, some of your position off, because it's in trough, well, it's leg F/B to the downside in the daily. The weekly chart is this is going to be for my book on all these different techniques. I've got it right here. I don't know where to write it. This is one of the biggest moves I've seen in a single leg to the downside. Folks, we're looking at Ichichi. How do they pronounce that? Ichichi Bank ADS? Akichi?
I believe
it doesn't matter how we pronounce it.
Like
it doesn't matter.
CC?
Is CC. I think it's CC, yes. So it's at 48.44 back in May of 17th of this year. Let me say it again. It's at 48.44. In one single move to the downside, it goes to the low of today, which is at 31.09. That's in a single leg down in the weekly chart. I've seen it happen before. In strong moves to the downside in a monthly chart, but this is a weekly. It takes a lot more in a weekly chart to have a single leg down, and this says this bank is in real trouble, number one. Number two is, do you have a number of positions, or is it just you're left with one put?
I have 8 puts on it.
Okay, so now's the time, right within another day or two, is where it should start, based on the 120-minute chart. It should start at least having an attempt at a rally. That rally is all the way from 31.31, where it is right now, to 32.95. It's trading at 31.31, down 64 cents. That's only a point and a half away, but it hasn't been able to touch that 9-period exponential moving average in the daily chart since it broke down on the 16th of July from 37 round number high. Plop, it came down. So I'm going to make a suggestion, and it's based on three things. One is it's based on money management, especially with options. Wow, you should be calling the next show with the options hour. They will be very impressed. But number one is I would take at least one or maybe even two off, because of the money management on a put, to be able to write it down. Even though I've got a chance here that the market could continue lower for a while, Ichichi should in fact participate. That's why I don't want you to mess with your core positions, but maybe even one or two, just to get, some people would say take off your principal and let the rest ride. Yeah, that's one way to do it. I would prefer to take off one or maybe two and keep three. Why? Because there's not that much to go, but that not much to go based on options says that if it goes 31.30 to the 200-period exponential moving average at 21.66, is a whopping gain. So I would try to keep something for that. I think it's going to stop before then. I think it's going to stop either right about now, 31.30, and before it has a pretty decent bounce, or it might just test 30.50 or 30.24. So I'm saying to you, I don't want to mess with your thinking, because you're the one that put this fantastic trade on. I'm only going to suggest that at this particular time, based on my 120-minute chart, it's the chance for it to at least have a bounce of a point and a half or so. Well, a point and a half on an option, we'll see the premium come back very quickly, which means that you would garner a lot more by exiting something right now than to take the risk of another 80 cents or something on the way down, because it's $1.20, $1.50 to 80 cents. In other words, the bounce could be as much as $1.50 if it works out. So that's my suggestion. Now, the core position, this is a real tough one, because when does this expire?
September 21st.
September 21st. Wow, I think it's going to go... The 34. So, yeah, you see, that's what I'm talking about, the premium. If it bounces a point from here, it'll give you, the premium will shrink quite a lot. It could, in fact, shrink about $1.20 to the 1 point. So I'm going to suggest that you don't have to do it right this moment. You've got time. There's still time, because it's still holding down 64 cents. It hasn't moved back with the market. But it is giving a little doji signal. and it's given four of them in the last 6 or 7 bars. It's saying this particular one, with the on-balance volume, with the stochastic and the MACD, this is the first chance that it has to bounce. So that's my recommendation. Take a little bit off. I would still try to keep the core position. I realize that if it bounces to 33, you're going to lose a lot of premium. So it's for you to decide whether you want to take 1 off, 2, or maybe 3, and keep 2 as a kind of a risk profile that says, this stock is just horrible. Anything can happen. I want to keep the 2 because I know that 3 of them have given me fantastic gains, and I'll still have a gain on the other 2 because I can tighten up the stop. I don't want to tell you how many because I don't know your strategy, but you're looking way out into September. We've still got August options to expire. I think you're in a great position. I would suggest that maybe you take at least 1 off, and that one you can put back if it ever hits 32.95, because that's the arch formation that should start a bounce to retest the lows. So that's my thinking. But if you had to ask me if you were short the stock, I say stay short the stock. One part of the short position should have a stop between 32.50 and 33.70. Something should come off, but keep the core position. So basically I'm trying to work within those confines. I hope that helps you.
It does.
And congratulations. The monthly chart has had a peak D. Talk about those peak Ds. This is at a peak. It made 2 peak Es on the way to the 2006 high. The major high at peak D in January of 2008 pulled back all the way from 74 down to $9.60, and then it had another peak, A, B, C, D, pulls back, hits the 200-period moving average, goes A, B, C, D. This one looks like it really wants to test the 27 to the last low of 24.40. There's something wrong with this bank, and I think you've hit the nail right on the head. But you're talking options, talking premium. My suggestion is, first of all, there's that expression, you don't want to be greedy, but sometimes you want to be in the right position and stay there. But this is the point where, wow, you've had a fantastic gain. Think about how much you want to take off and where you would like to put it back on. Hey, congratulations, Jan. That's fair. Was it originally Jan or is it Jan? Were you always Jan or was it Dutch?
Jan. J-O-H-N.
J-O-H-N.
Yes, it's my accent, I'm sorry.
Oh, okay. So it's not okay, John. Okay, John from Knoxville. Okay, John. Sorry, I was mispronouncing it. So, thank you for calling and congratulations.
Thank you very much, Basil. Thanks for everything.
Thank you. And let me know how you're doing.
I will do. All right. Bye.
Thank you very much. Bye. Okay, folks. So we had in the den. We had a couple of questions. Let me just go in order here. The first one, Zip wanted SLW. SLW is I should know the silver wheaten core. Ugly candle, made a peak D. Oh, how many peak Ds? If you want to learn about the Chapman Wave methodology, my CD Introducing the Chapman Wave Methodology is a great book, but I will be doing a couple of master classes coming up in the future. I'm just trying to organize some days to be some complications. 2364 was the high on the 23rd of July after making the 1776 low. 1775 low on the 26th of June in SLW, silver wheaten. It's down 85 cents at 21.08. It's had a very nice rally, a nice percentage move, 5 points. 5 points, wow, that's about 30%. And now it's pulling back. It's filled the gap. I think it's going to, the big test for silver wheaten is going to come. It's under the 200-period moving average. I don't know if it's going to test the candle of 20.65, the low of the 18th. My suspicion, it's very close to at least a bounce attempt. My big concern with the number of these gold stocks is that the weekly chart is acting very well so far. I don't want it to drop. I would not like to see silver wheaten break under 20. But I think right in this area, within a day or two, it should stabilize, and then it has to go back to 21.78. I don't want to talk about the monthly chart. It still looks terrible. So I hope that helps you. I'll be right back with some other questions. Basil Chapman, Tiger Technicians, Dow's down 101, S&P's down 10.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
I'm Basil Chapman, Tiger Technicians Hour. Oh, I didn't even look at that chart. Let me just get that right now. Couple of things. Let me just do this. I can't remember which one it was, long-term charts. There it is. The Dow is down 98, trying to come back here. The S&P is down 10 now. This is very interesting because the S&P has become a little bit more vociferous on the downside than it was before, and that's excluding IBM. So there are a couple of things that we're looking at here. The one aspect that is very important to me, first of all, interest rates. Yeah, this could be a peak C in both the 30-year yield and the 10-year yield. There's still only a peak A in the 5-year. There's a big discrepancy, the divergence. I keep forgetting what they call that stuff. I should know it. They use it for years and years. Now, the VIX and I spent time yesterday. We were looking at. I think it was Dan that called. And we were looking from New Jersey. We were looking at the VIX, and I said that the XIV is in a leg F/B, but I'm giving it the cautionary letter of F, and that the trough E in the VIX itself, so the XIV is the 100% inversion ETF or ETN, whatever it is, of the VIX index, and it was making a leg F could be a peak F. So I'm watching this closely, because if this thing drops from the high that it made at 29, round number 29, I was just showing round numbers to the folks in the den. How many stocks? Zillow, there are so many round numbers. Round numbers and silent dojis is a technique that I've developed, Chapman with silent doji. We're going to be watching this. So if the volatility index, which is at 12.60, I said over 1250s and holding, that's what would keep the selling pressure on. If the volatility index does not pull back to the 1240s, but in fact starts to move to 1270, 1280 over the period of the day, a second wave of selling will come in. Now, I wanted to get through that. Let me quickly do what I said I would do with the den. So Starbucks was one of the questions. Starbucks, I'm going to call this B. I think it's holding really well. It is very extended in the weekly. You've got to expect a pullback over the coming weeks to the 69's 9-period exponential moving average. But I'm calling it leg C in the monthly. Very positive. But the daily will go to an alternate count of a G. So this could be an F, or a G right there. And I will call it a G if, in fact, it closes underneath 72.35 is the 9-period moving average. But if it closes underneath 71.40, or if it starts to fill in the gap underneath 71.22 in the next 3 to 5 sessions, I'm calling it a right arm extension peak G, and then you can expect almost a complete fill of this gap over here. I think the upside depends on whether it can break above, it goes above 74.27 by 1 penny. I'm calling that leg C, and it will still go higher. So let me just do this real quickly. Go through the indexes, SPX.X. Don't forget my opening call. All of this is discussed in great deal in my opening call. Peak F in the S&P daily chart, F/A in the weekly chart. If the S&P takes out this doji candle low of 1682, it's at 1697 right now, anytime in the next week or so, that's going to be a significant top, and that'll say I've gone to sell mode, probably a sell mode in the daily, probably a sell signal in the weekly. I have to wait for the full week to complete. So let's go through the QQQs and leg C. But there could be an alternate count of an F. I'm giving it the benefit of the doubt right now to say, let's just say that it's a peak C and that there could be a new nominal high, just a few pennies above 77.08. Wow, is that the music? Oh, I can't believe it. I want to finish some of the other stuff. Well, that's the way it is, folks. I'll be back at 5 o'clock to do Tom O'Brien Show live right here. And thanks for tuning in. My service is the opening call. Don't forget, we are short. I wanted to talk about another, I'll do it tomorrow, another indicator, a sector that we went short. I'll be back at 5 o'clock. Stay tuned. Great shows coming up all day.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.